welcome back to another episode of Reinventing Finance. As usual, I have a lovely guest with us today in the show. Alex, how are you today?
I'm fine. Thanks a lot for having me, Nick.
I think some kind of public disclosures are in order. Alex and I actually work together. We know each other for a while. I think this conversation will test whether we continue to like each other as well. I always had the tremendous respect for what you've achieved, and really thankful for you for taking the time and walking me and everyone listening and watching through what's next. Really great to have you here.
Yeah, thanks a lot. I still remember our great time in Berlin when we were working on a project together. It was a lot of fun. Yeah.
Yes. It was, I think in German we have the saying, diamonds are created under pressure. It certainly was felt like pressure. I don't know where the diamonds came out of, but there was some pressure.
It depends who you ask, I would say. Yeah.
Now, I obviously know you. But for the few of our listeners who your name doesn't ring a bell, who are you? What have you done? And maybe, what have been some, as you would say, relevant milestones and, in your career that kind of brought you today that you think might be helpful to kind of put you into a box?
Yeah, let's try to put it into a box. I'm Alex. I'm currently one of the three founders of a company called AQUATY. Probably we will dive into a little bit deeper into what we are up to later in this call. Previously, Nick mentioned it already. I've been working in a consulting company together with Nick, consulting banks, insurance companies, and other financial institutions. Then had a short stint in an investment bank, and then had the lucky shot to meet Chris and Marius, the founders of Getsafe and InsurTech company, and really joined in the early days when we were just 10 people or so, now 8 years ago. And then served the company as chief operating officer for 8 years. It was quite a hell of a ride with many ups, also some downs. But at the end, I believe we built a very successful company, now active in 4 countries, collected quite also substantial funding along the way, 250 people, and at the end also a full stack insurance license granted by our regulator, the BaFin. And in this regulated career, I also had the opportunity to serve as one of the board members, which also was a very interesting experience of someone building a startup company, then also serve in the board of a regulated company and deal directly with the regulator. So this was the story so far. And then after 8 years, for some personal reasons, we got our third kid at home. So also 3 mini startups, as I call them, at home. I took a break, dive deeper into topics of interest, ranging really from diving and exploring a lot of AI tools to writing a children's book by myself, to helping some friends with their businesses. Also to the topic of angel investing, where I did a couple of angel investments along the last year. And then along this journey, also met a bunch of people. And with 2 of these people, it really clicked. It was Rob and Basti, my co-founders at AQUATY. And then we decided to team up and build the company. And yeah, this is a little bit my journey. So happy to dive into each of these episodes a little deeper. But currently, as I said at the beginning, I'm building AQUATY.
Cool. I guess one thing that I'm always quite wondering is there some counterintuitive advice? There's so much. If you're, currently listening to a podcast with Mark Cuban, it's cool. But there's, if you're part of that kind of ecosystem, you've heard a lot of the advice before, right? And I think we've all lean startup or 0 to 1. So was there anything kind of counterintuitive that you've learned that you didn't really expect to take out of such a journey? And if it's nothing, that's fine. But I'm always looking for something counterintuitive. It's more entertaining.
No, I would say, there always from the sidelines, there are a bunch of people who give advice, right? There's never a scarcity of advice, I would say. but it's really difficult to pick the right advice, right? And I think you really have to follow your guts, and have this internal compass to really decide. And there are so many decisions along this way which you cannot find arguments for, right? It's just that you feel it and you follow your intuition a little bit. And I think especially in the early days of building a company, this is what I now try to incorporate also with our new venture, to not discuss anything. Sometimes you just have to feel it and follow one path, and not listen or answer every question that is asked why you choose this path. Yeah.
Fair
And it
enough.
might be wrong, right? You're often wrong taking or choosing a path. Probably you're more often wrong than right. But at the end, that's also building a business, right? Choosing, making decisions, and choosing one option over the other.
Yeah, I think kind of two things that kind of stuck with me, and this is something I'm experiencing working more with corporates. It's not a, you just make so many decisions, and if you can kind of iterate, if you can adjust the decision, it's just not worth arguing about something because you don't really have the data, or collecting the data would be way too, so you'll just kind of go ahead, and if it doesn't work out, you'll change course, and that's like most of the decisions that you're having. The other thing I just wanted to get your advice on, before we then obviously jump into equity, is recently read First-Time Founders Focus on Product, Second-Time Founders on Distribution. That would certainly be one of the things. Anyone knowing me, I like the phrase "Don't build what you can't sell." Is that something you would sign up on?
In a way, yes, of course, right? I think you always have to do the test if it sells. But in fintech, it's sometimes a little bit different or difficult, right? Because at the end, you're delivering a service, and this service requires a lot of regulatory compliance, and at the end also infrastructure to service that. It's not like that you can sell a shoe that you don't have, right? In e-commerce to test the waters, but it's a little bit more tricky. But on the other hand, I think being guided by what the market actually wants is a super important topic when you build the product, right? And really go out, talk to people, talk to potential customers very early in the journey, because before you build too much, and also build broader paths for the customer journey, and not very narrow how you think the customer will walk through, is I think super important, and the learning that you really have to experience, right? And I think a lot of these things, now 8 years building a company and making many mistakes, you just know them and you just feel them, but it's really hard to explain them to someone who has not done this topic. Sometimes you have to touch the hot stove, right? In order to don't do it again. And there are little arguments, right? Why you should do that this way. You just feel it, know it, that it's that it should be like that. And I think like talking to the customer first and really feeling the demand, and at the end satisfying his demand, not in the most beautiful way, but making him pay for the service that you offer, is an important first step. And then paving the road and the customer journey to do it beautifully and at scale is I think a good topic. Yeah.
And I just realized you're a B2C guy. I'm a B2B guy. Because
Yeah.
you're absolutely right. Because I was just thinking, no, of course you cannot offer a fake insurance product, even though I believe that Allianz even did something like that and kind of just knocked them through a sign-up page. But you can't really, you need to be careful. With B2B, I do believe, with the kind of budget and a presentation and a business case and you can get a long way of kind of getting your first B2B customer. But anyway, tell us a little bit more about equity. So what's the problem you're solving? Or what's the elevator pitch, however you like to kind of start there?
Yeah, the elevator pitch is always a tough one, right? Because if the audience is not aware of the topic, but at the end we are making private market transactions with equity a lot more efficient than they are at the moment. And private markets, purpose for those of you who don't know what this actually is, it's investing in companies that are not publicly listed. It's investing in infrastructure projects like wind parks or solar panel farms. It's investing into private debt, or it's also private equity topics. And venture capital is one of these private markets. And currently, we see that the infrastructure that is built for investing in these markets is, we would say, Stone Age, right? There is very little technological infrastructure. Most of these processes happen really in manual workflows involving a lot of legal paperwork, and thus investing in these asset classes is quite complex and quite expensive. And very little people do it. It's done only by the super rich people. Not even the rich people invest in this asset class, but only the super rich family offices, institutional investors. And that is also a consequence of lacking infrastructure and lacking technology for these markets. And you always have to keep in mind that these markets, from a performance point of view, are highly attractive. They have a lot higher returns than public assets. And thus, we feel that this asset class needs more infrastructure. And that's why we build technology for this.
Okay. Would you, so what's the solution then? What's the product? And maybe, start with kind of maybe your first use case, the first problem, because obviously there's a roadmap and it can be big, etc. But what's the first problem that you're solving and from which you want to jump forward?
Yeah, maybe a little bit of context and also a view on the public markets, why they work and how they work. Because I want to take the example of let's say a product that probably many of the viewers also or listeners also use, like Trade Republic, right? They make really stock exchange super easy. With one click, you can buy a stock or trade a stock or ETF and all these topics. And at the end, you look at the front end and you never ask yourself what at the end happens in the back end. Why is this transaction so easy to be conducted? And there are a lot of layers and technology layers that at the end, the business model, a front end business model like Trade Republic, is based on their custody systems, where this information are stored, their exchanges, and many technology players at the end made public markets so super efficient as they are today. And you probably still remember the old movies, right? When at the stock exchange floor, people were ringing the phone of the broker. Hey, I want to broker 3 million of General Electric shares, and the broker was looking for someone who wants to sell these shares, and it was also a highly manual process. And at the end, for private markets, as I said, this infrastructure does not exist. And that's why we really started out with our technology approach to build the infrastructure on custody, on settlement, to really be able to, at the end, trade private assets more digitally and transact these transactions more digital. So that's the infrastructure piece that is pretty universal and also super scalable for asset class like venture capital, but also to other asset classes. And then it's always hard to pitch what this infrastructure does, right? Because it's a little bit like it's back-end technology driven by blockchain and artificial intelligence. But then in order to really pitch that and make it tangible for people, we started with our first product, which is a syndication product for venture capital. And imagine the case that a group of people, like a business club group or some business angels, they want to co-invest in a startup company. So normally startup companies don't want, like, let's say, super small tickets on their cap table. So they usually pool the investments and the investors. And for our technology, this process of co-investing in super flexible structures happens really super seamlessly via our technology and the regulatory framework that we are using. And so it's cutting down the cost by factor 10 than the usual process that would involve power of attorneys, notaries, a lot of legal paperwork.
Could you walk us? I mean, or is that too complex? But could you kind of walk us through a normal process of what that would entail, or the key steps, so we can just kind of walk through and then to say, and all of this is kind of covered with the technology, and these are kind of the main pain points, because I think that would be helpful. It would be helpful for me.
Yeah, sure. So imagine there's a business angel group. So you have someone who finds an asset that he wants to invest in, and then asks a couple of friends to co-invest. So how does it work normally? So normally these let's say 4 or 5 people each wants to invest 20k euro. So in total 100k ticket into a startup company they want to invest. So the one person clears with the founder, hey, we want to do 100k, right? Then he has to clear with all his 5 friends 20k each, and then it requires some vertical, right? Some vehicle to do the investment, the so-called special purpose vehicle that is normally being formed. And then these 5 people go to the notary, right? Found this entity.
Is that like a GmbH, or is that like a special?
Yeah, it's a GmbH or UG in Germany.
Okay.
It's simply an investment vehicle. So that has to be formed, has to be set up. And then this investment vehicle buys stock or invests into this startup company, right? And then if this group wants to do another investment, right, they have to form a new entity, right?
Okay.
Only because the shares of the entity represent also the investment amount into these companies, right? So if now only 3 people want to invest in a new company, they have to found a new SPV, they have to maintain it, they have to do the tax filings. And at the end, if you have super flexible investment schemes and many deals per year, that ends up with a very complex structure that you not only have to set up bonds, but imagine all these SPVs, they last for 10, 15 years, because that's the time as long as the investment lasts, right? And you have to maintain them all. And this
So you
is then
can't. So you usually, there aren't kind of aggregate SPVs, and you manage that somehow through kind of share allocation and virtualization. That doesn't exist in kind of paper form yet.
in paper form that does not exist, because at the end the information are stored at the notary, right, in Germany, and at the Handelsregister, where these information are being stored, who's the owner of the entity. And but you mentioned quite the idea that we are pursuing on solving this problem a lot smarter. So we have created what we call a multi SPV, who can at the end invest in multiple targets, and then investors can buy digital shares or tokens from these companies, and that at the end solves the problem, or solves the same process and caters to the same need of the customer, but in quite a different using quite a different approach and the new technology and the new framework to solve.
And just because I'm always a bit cautious from, people throw around technology and efficiency, and you've said blockchain and AI, etc. And I just kind of want to, so even without the technology, how would that work? You would set up a new GmbH, right? Because technology only matters if you have lots and lots of repetitive processes. So what would be that multi SPV if we were just to do it kind of manually? What would be the different setup? Because I think then it's easier to understand what the technology then kind of helps you do.
Yeah. So technically, this process would also work manually, right? So this multi SPV would still invest. I think this process is the same. But at the end, the multi SPV securitizes the asset and builds shares, tokenized shares of this asset. And for each of these shares, you would have to write the security documents yourself, right? And you would need to employ 20 working students to do that with a very high level of legal diligence. And for our technology, like legal automation system, we can generate all these documents. And second part, we can also issue these documents in a regulatory clean framework, because we have the right licenses and the right process in place to do that.
I was going to say, so how do you, I'm not a banker. I'm more the kind of insurance guy. So what does it mean to securitize an asset, and can anyone do it?
I don't want to go into too much detail in this podcast, But of course, not everyone can do it. It requires, at the end, a legal framework and a regulatory framework that we are using and that we are also applying in our technology. And there's a mixture of regulatory stuff, a process, right? And a lot of automation also.
Also licensing, like can any GmbH securitize, or do you need a specific license to securitize
Exactly.
them?
You need to be licensed by BaFin
Oh,
to do.
okay.
And we are also providing the license to.
Okay, okay, understood, understood. Yeah, no, I don't want to get, but I think that in of itself, because me and my buddies couldn't just get a BaFin license. I don't know whether that is something that me and my buddies
Like
would
with
want
all
to do.
technology, everybody could build it, right? And everybody could like follow this process in a very manual way. But that's at the end also building software, right? That
Absolutely.
one party does it, and then others and provides it to others as a service, right? And that's what we are doing, and that's also the reason why we feel that the private markets are now ripe for this digitization. But you could have done it like 20 years ago also, because the frameworks are not super new, right? But simply what was missing was the technology piece, right? And someone to really automate all that, to be able to do that at scale for many customers and many asset classes.
Okay, and so by doing that, I, as an investor, for example, could potentially participate in interesting, um, I could participate at lower costs in interesting deals where I myself don't want to put up enough capital that would make it interesting for the startup, because I just want to place, I don't know, 20,000, as you've mentioned.
Yeah.
And do you have an idea?
Let
Is
me
your
give
pitch?
you an example, Nick. Maybe that helps a little bit. Like one of our customers is an asset manager who co-invests with a couple of, let's say, semi-professional co-investors, right? And they now have access to a very interesting deal, right? I just mentioned that it's somewhere in the Elon Musk company setup located, and they have a secondary deal option for that, right? A 7-digit number into this deal. And now they're using our platform to, at the end, distribute this deal to these private investors. So what is happening? We securitize this deal, and the co-investors on the platform can now buy smaller chunks of this asset through the platform, and therefore be a shareholder, more or less, of a privately held company in this very attractive privately held company.
Okay, so and okay, understood. And if you, what's your kind of go-to market? How do you find? Do you just go to the investors? Is it irrelevant for you to create deal flow? Do you go to the big investors? Do you go to small investors? What's your current current go-to-market strategy, and why?
Very good question. So we are not the asset manager ourselves. So we don't have assets, right? There are players, or there have been players like Equinors. They had Forest, for example, and they then tokenized this and sold it to investors. That's not what we do. At the end, we are just operating the transaction between the asset and the investors, and facilitating at the end the life of the asset manager who wants to bring investors into assets, right? It can be a real estate object, like a big commercial building, for example, where 20 people want to co-invest in that. It can be an infrastructure project like a wind park, where 100 people want to co-invest into a wind park, or it could be a privately held company like a startup, where 10 business angels want to co-invest into, let's say, Getsafe or Casco or whatever company.
So that means you're kind of targeting the asset managers, but because they have to have all of the investors and the targets.
Talking, but you get the message. Yeah, the asset manager is at the moment our core target.
Okay, and so what's your business model? How do you make money? And how much cheaper are you against, what's your pitch number against, going to the big law firms and making everything with email and etc.
Yeah, exactly. So we take a little bit different approach. So when we syndicate, we take a little bit the PayPal business model. So we take a share of the transaction volume, and this share of the transaction volume depends a little bit on the asset category, on the amount of co-investors, and so on. But if you let's say syndicate or do a transaction on 100K,
like the notaries, they also take a share of the transaction. I think that was like our friends at the notaries. They also take a share of the.
Yeah, that's true. But their share probably is a bit higher than
I would
the share
imagine
that we
so.
are
Yeah.
taking. Exactly.
Okay. And for that you cut out what other expenses that you would otherwise. Do I still need to? So I don't need to go to notaries. I don't need to incur the costs of running my own SPVs and the tax and all of that. I don't need to go to lawyers, I guess, because you have templated
Exactly. So
legal.
many things are templated, right? I mean, it's a journey, right? We never say you don't need a lawyer anymore, and some notarial action might also be needed in some cases, right? For example, you have to set up this multi SPV once, but not every time again. But at the end, those are exactly the costs that we are saving. Yeah, costs to run and set up these SPVs, do the tax filing, and maintain this whole structure. You don't have to go, the single investors don't have to go to the notary anymore, because they can purchase these securities, these bankable securities fully digitally. And a lot of also, let's say, logics, for example, price calculation of startup shares that normally legal people or lawyers do, or often lawyers do, are also conducted via the tool.
And okay, so what stage are you guys at? You've mentioned you have first customers. Are you, can you talk traction figures, size of the company? What are you interested in sharing?
Yeah, so we are currently full in go-to-market phase. We have a live product. We have customers, more than 15 customers already using the platform, and we are getting great traction. So many people are interested in what we do in venture capital syndication, but also outside of venture capital syndication. I talked about real estate. I talked about airplanes, which is also a very interesting topic to look into. To a couple of friends to buy a commercial airplane, and these are topics that
you have some friends who are looking to buy a commercial airplane.
Unfortunately, not my friends. Yeah,
okay.
I would love to fly with them, but maybe there's a chance if we facilitate this transaction also to do that. But that's what I'm saying. We get interest now in this securitization topic also from other private market asset classes outside of venture capital, which has been our initial go-to-market. I think we are picking up very, very nice traction there. With angel collectives, also some VC funds, some fund of funds who are looking into our solutions. But we are also at the end scaling the technology pretty fast into other private markets, which at the end are facing the same topics, right? In a little bit different connotation, but at the end it's always the same logic. The bigger the asset is that you can get access to, the better the performance is. And if you can cut this big asset into smaller chunks, and I'm not talking about retail like 1K investments, right? About like crowdfunding stuff, but really into smaller pieces, then you can facilitate the access to this.
So what's next for you guys? What are you you're scaling the product, you go to market. What do the next 6 to 12 months look like for you guys?
Yeah, always exciting times ahead, right? So now we launched, now we grow, and we want to keep this momentum and grow our customer base. I think we have a couple of nice projects also lined up that we want to pursue. And we are always looking for partners and believers, of course, in this business. And also looking to close new partnerships with asset managers as our customers, or other players or intermediaries in this ecosystem, to grow the business, right? So I think the next 6 to 12 months is really as this super nice infrastructure that we build, bringing it to more customers, and really at the end growing the business in this way.
And are you looking to bootstrap? Are you looking to raise funds? Is there anything on, is that, because investors are obviously, you know, your customers as well, but they could also be your investors. So what's your plan regarding that?
So we are not bootstrapped. We are also venture backed. I think growing and building this infrastructure is a very interesting case. So I'm also talking to some investors, and I would say you're always fundraising in a way, right? That you always talk to investors. There's always quite some interest because you mentioned it. We are also at the end tackling problems that our VCs have as our customers. And that's why I'm like talking to some of them. Might be also some fundraising in the future, or in the near future, to really fuel the growth.
Is there any kind of topic that we haven't touched, but you would like to venture into?
Good question.
No is a perfectly acceptable answer.
No is a perfect answer. Then I give you the perfect answer.
It's not perfect, it's perfectly acceptable. But okay, and I think you've also already given a shout out. So if you're interested, you know, if you're an asset manager and you're looking to synthesize larger assets and distribute them to kind of smaller chunks, I guess Alex would reply to your message. What is the best place to reach you at?
Probably you can find me on LinkedIn. Maybe you can share it also under this podcast. Or you can also contact us via our homepage, is AQUATY.vc. And
how do you spell equity?
Aqua, like water, and T, Ty, AQUATY. It also means making equity investments more fluid, right? That's where the brand comes from. So if you remember that, you also find our website.
Awesome. Alex, thank you so much for walking me through an area. I mean, this podcast is called Reinventing Finance, but everyone knows there's a strong preference towards insurance from my end, and this really got us
to talk to you about insurance, right? It's still a topic of my passion, and where I do some angel investing, but this time we spoke about different topics now.
Awesome. Well, this is actually a good time because my 4-year-old is jumping in. Alex, thank you so much for your time, and have a lovely weekend.
Take care. Thanks a lot for having me. Ciao, ciao.
Thank you. Bye.